CFRA Research Chief Investment Strategist Sam Stovall. Welcome, Sam. So how do you look at the re-rating of this market, and how much more can it go?
Good morning, Sarah. Well, I think contrary to popular belief, actually a red wave is the best thing for a Republican president. When you look back to World War II, the average gain has been 13%. The split Congress is usually best for a Democratic president, but a red wave is best for Republicans. And it's good not just for large caps, but also the Russell 2000 has gained 14% on average during a red wave year since 1980. So in general, I would tend to say that investors have sort of ratcheted up their expectations. I think Michael Santoli just mentioned some interesting points about valuations. I think we do have to realize that we can't be going at these kind of directions for forever without some sort of digestion of gains.
Right. I'm wondering what's happening to valuations right now. Russell, by the way, it's up another 1% today. It's outperforming. So where are we in terms of reasonable valuations?
Well, we're looking at a 40% premium for the S&P 500 to its long-term forward PE ratio. So a bit pricey. This is where we were back in July of this summer when we went through our 8.5% pullback. The tech sector is not as expensive. It was at 78% premium to its long-term PE. Now it's just 65. But still, I think between now and the end of the year, I think investors are going to be riding this optimism. But I do think that we have to watch and make sure we just don't get too far ahead of our skis.
Sam, I think you said the Russell typically benefits from a red wave by an average of 14% or so. Is that from the time of the election, not from the inauguration of the incoming president? And by the way, I don't know what the Russell's up, but it's an awful lot in the last week or so. I mean, a lot of that gain may have already taken place.
Oh, absolutely. Yeah. No, the numbers that I just mentioned were for, on average, a full calendar year with more than 80% frequency of advance. But just looking at election day to inauguration day, whether you look at large, mid, small cap stocks, their average gain is a little less, if you will, than what I think the market will be showing this time around. But the batting average, more than 80% frequency of advance. So in general, there is optimism between election day and inauguration day, mainly because of the anticipatory expectations.
So I guess when do the policies have to be delivered to change the fundamental backdrop of earnings expectations? Lower corporate tax rates, deregulations, and that wild card around trade as well.
Absolutely. I mean, right now we're seeing Q3 numbers that are twice what was expected as of the end of the quarter. Full 2024 numbers up about 8.5%, according to S&P Capital IQ consensus data. And both 2025 and 26 are likely to see 13% earnings growth. So I would tend to say we will need to see upward revisions to these forward estimates in order to justify these valuations, and also to see whether tariffs end up being more of a negotiating tactic than a fait accompli.